Welcome to another edition of At the Wheel with me, Joe White of the Speed Rodeo newsletter on Substack, and Tu Lee of Sino Auto Insights. And you can also find him on Substack at Sino Auto Insights. We are going to dive into the latest news from the world of cars. We always have a lot to say. None of it should be taken as investment advice. We were just talking before. I got a lot on my mind. You probably have a lot on yours. Where would you like to start this week?
Let's start Tesla. I want to get your thoughts on the earnings call, their cancellation of the Y, or not the Y, but the
Model
S
S.
and the X, and his reasoning and his, let's say, justification and rationalization for all these moves or lack thereof to reinforce the automotive business for Tesla.
Yeah, or not reinforce it, change it, pivot from it. So look, and this is what I wrote sort of the night of, and it's actually, for once, it's actually stood up reasonably well over the ensuing days. I mean, I call this what Musk did on Tesla earnings call and the forecast that he provided and the outlook he provided is basically a $20 billion Hail Mary pass. I mean, he is going to spend, or the company is going to spend $20 billion in this year, 2026, capital spending. Is probably more if you take into account engineering and R&D expenses. They're going to spend $20 billion on outfitting 6 factories to pivot toward robots, automated cars, the humanoid robot. They're going to take the Model S and Model X out of production at Fremont, California, where the plant that they've had since the start. And the Model S, one of the most iconic and I think historic vehicles, produced in the last century. I mean, we could have a whole podcast.
2013 Motor Trend Car of the Year.
Yeah. And also really the first truly successful high volume electric vehicle sold in the United States for sure. And I think maybe sold anywhere because it predated the surge in China. I mean, obviously China is now the electric vehicle capital of the world, but when he launched the Model S, it was a whole new thing. So,
What do you think inspired the Chinese entrepreneurs? It
Exactly,
was the
right?
Tesla. A lot of those
Percent.
guys bought it in China
Absolutely.
and drove it around.
Absolutely. So he kills this. Now, look, it's a 13-year-old car. 13-year-old cars tend to go out of production, right? I mean, that's the way things are. But he's been, and we've talked about this, but lots of people are aware of this. Maybe some people aren't. He has been telegraphing that Tesla is going to de-emphasize, move away from consumer EVs for quite a while. But last week's earnings call was really the light the candle moment. He's really going to do it. He's really going to just cease production of these 2 iconic models. He's going to de-emphasize cars in his capital spending plan. He's going to start converting factories toward robotics. And it's a big deal. And it's a big risk because, the cybercab fleet in Austin, or, the relatively few cars that they have running around Austin, that is not a revenue producing business yet. Maybe we'll come to whether it could be or not, but it's certainly not now. Model 3's business is under enormous pressure from the Chinese everywhere else in the world except America. And in America, it's under pressure as well. This is a company that's worth $1.4 trillion, has a, I don't know what, 200 price earnings multiple or something, crazy, and,
I think more than
3-digit
that.
number, but it's shrinking and its revenue outlook is weak.
It's shrinking for 2 years straight.
Yeah, for 2 years straight, its revenue outlook is weak, and they're going to spend, quite a bit more in capex than General Motors or Ford or almost any other auto company. I haven't looked at Volkswagen or Toyota, but it's up there. And you say, well, fine, Joe, they're not a car company anymore. They're an AI company. $20 billion is what AI companies spend. No, it isn't. $90 billion is what AI companies spend. That's what Google is spending, or Alphabet. So anyway, there's that. One other thing, and I'll throw to you about this, but one other thing I think is, subsequently that's important. And again, I think most listeners are aware of this, is that Musk yesterday evening confirmed that indeed he plans to merge SpaceX, which he controls as a private owner. I'm sure there are investors of stakes, but he's the controlling investor, of the founder. he's going to merge SpaceX with XAI, his artificial intelligence, his open AI, Anthropic competitor. Except as Reuters reported today, a lot of what its product Grok does is enable people to make abusive, sexualized photos of people who have not given their consent to that. But that's another podcast too. So, but at any rate, he's going
Probably
to
not ours.
not
Probably not
ours,
ours.
thank God. But he's going to merge those two entities. Bloomberg, Reuters, I think Reuters broke the story about SpaceX and AI merging. Bloomberg has had stories about potentially SpaceX and Tesla combining. I mean, Musk basically combining all of these enterprises that he has founded that, at least at the beginning, appeared to be in very different businesses. Satellite rocket launch, computer science, AI, electric vehicles. Well, now they all come together if you use the word AI. So he hasn't said, I'm going to try to merge Tesla and SpaceX, but if SpaceX has a stock, which again, number of outlets have reported that an IPO for SpaceX is in the works or in the offing. Once
And it
SpaceX
would
has
likely be over $1 trillion
could be.
for the combined companies.
Yeah, no, absolutely. And look, SpaceX is a legitimately successful company, right? I mean, they've revolutionized rocket launch. That's real. You make SpaceX a public company, then you have a value, right? That you can literally take to the bank. Shareholders at Tesla will, and investors at Tesla must say, well, now what we need to do is merge these two companies. Well, then there's valuations on both sides. And you could combine them and say, well, Tesla is, I'm making this up. I don't know what the real numbers would be, but let's say Tesla is 1.4 trillion, SpaceX is a trillion, whatever that ratio is, that's what the shareholding becomes for everybody involved. He has not said that as to my knowledge, he's not said that he plans to do that, but there's a lot of talk that he will. And the logic of it is pretty, it's one of those things where if it isn't true, it probably should be, given the logic of what he's been saying about the primacy of AI to all of this. And that's going to be something else. If anyone listening to this has not gone to SpaceX's website and read the blog post that Musk put up announcing this combination of SpaceX and XAI, you must. It is something else. He's talking about putting 1 million satellites, data center satellites that would operate as data centers up in the sky, up in the heavens. It's truly something else. So,
So
yeah, there's a lot going on there.
So I'm going to jump on my soapbox a little bit and pull out some of the things that you had mentioned. The S and the X, canceling those, more symbolic than anything. They were 3% of sales, so 1.64 million, about 4,000, 5,000 units were sold last year. And to your point, they're 12 years old and they're a rich person's car. They have about 2 million units of capacity, over 1 million in Shanghai alone. And once they convert to building humanoids, will the demand be there? Because converting a factory over from building one thing to another, let's say that takes 18 months, 24 months at the most. Will there be 1 million units of demand? Because that's the number he was throwing out
That's
there.
the number. Yeah, 1 million units seems to be his go-to number for. I mean, he's going to put up 1 million satellites. He's going to build 1 million robots. It's a big number. It's not a number that it's not a number that's consistent with anything that sort of makes sense. I mean, he himself has said, and I have heard other people in the robotics industry say that right now there is no supply chain for humanoid robots. I mean, and of course not, because they're not really a mass market product yet. And honestly, if they are, it's more so in China than anywhere else, right? But so just the supply chain, just setting up and tooling up a supply chain is going to take every minute of the 18 months that you suggested and probably more.
And unless they want to vertically integrate, it's going to take a lot of help from tier one's
Mhm.
suppliers that are either pivoting out of automotive or
Mhm.
creating a new revenue stream.
Yeah.
Okay. But and if you look at it with the glass half full, that could be an opportunity for the United States or North America because there isn't a supply chain for robots yet in China either. Now,
Right.
converting
And
existing
that's,
capacity
yes.
in China, go ahead.
No, no, you're right. I mean, and there, and it's not like It's not like many. I mean, I was just touring Fanuc Automation, the Fanuc, the industrial robotics company, and they don't make humanoid robots, at least not yet. They're much more traditional. But the point is, a lot of the hardware that you would need for humanoid robot exists and is made today to support, robotic arm types of devices. So it's and so right, if you're Fanuc, but Fanuc's a Japanese company, but they have a significant North American presence and have had for a number, for decades.
Are they really Japanese? I thought they had some Chinese IP in there
Well,
too. So
I think they're found their headquarters is right in the shadow of Mount Fuji in Japan. So
okay,
that's what they show you when you go in the office. I'm sure they have a lot of customers in China. But point being, yes, you're right. I mean, Fanuc's not the only robotics company. I'm just using them as an example because I went and visited. ABB is a European company.
Kuka,
Kuka's Chinese owned now. They're
Chinese, yeah.
German roots, but point being, all those companies, every single one you named, has significant business in North America, mainly automotive, and has supply chains, and presumably those supply chains could be scaled up. But, if nobody else, I mean, I've, for one reason or another, in the last month, have spent more time in the presence of people who are trying to sell humanoid robots than I had spent in my previous life, the entirety of my previous life. And none of those people, not Hyundai, not and there's another company name blank on the name, but Eptronic, not them. None of them says, yeah, we expect to be selling 1 million humanoid robots to any market, let alone the consumer market, which Musk has talked about. They say that's not going to happen. These things aren't going to be ready for that anytime soon. So speculative.
So here's a few other points I'll make about Tesla, and then we can move on. There's 1 million units of capacity. It's wholly owned in China by Tesla. But in order for them to continue to get those tax subsidies for that factory, Shanghai Giga, they're going to continue to need to build. So I would venture to guess that Fremont's going to be number one because he said it's going to be number one. He's not going to touch the Chinese factory for a long time. And that means he's probably going to be slowing down Austin Giga, which is already not running at capacity. And then if we look at Berlin, that's not running at capacity either. Okay, so there should be a lot of exports coming out of Shanghai Giga to the rest of the world in the next several years if he does indeed convert capacity. Now, that's the dirty little secret because he's still going to be making cars in Shanghai for the foreseeable future. Okay. It's clear that he doesn't want to invest in refreshing any of these vehicles. He wants to move over to the cybercab. The other thing that I think is really important is we talk about humanoids and then we talk about robotaxis. And then FSD is kind of the foundation of these robotaxis and cybercabs. But there's a chance that FSD doesn't get approved in China this year. He had mentioned earlier this year that approval for FSD in China is imminent. The Chinese government was like, not so fast. And the other thing that I think is really, really important is that they have competitors, viable competitors. Now, FSD, I think most people would tell you it's the best system out there. Alex Roy, friend of the show, Alex Roy, he took it reverse cannonball run with no interventions. That's super impressive. And then there's another gentleman, his name is David Moss. He went from California to Florida. So it's capable of being perfect for certain trips, but being perfect day to day is still a long ways away. You and I
Yeah.
kind of talked about this in our private group chats, but and I think this is where you also raised the point about Google or Alphabet spending 90 billion. Are is Tesla kind of odd man out because they're bigger than a traditional OEM from the standpoint of market cap and access to capital, but they're not a $4 billion company like Apple, like Alphabet, like Amazon are that
No.
has access to that level of capital. I mean, I looked at today, Alphabet has $100 billion in the bank, just cash. So
Yeah, no, yeah, for these multi-trillion-dollar tech companies, they're in a different world, just as Tesla is in a different world from General Motors or even Toyota. No, you're right. And again, I mean, yes, I mean the question of when a system like FSD is truly going to be kind of ready for wide scale kind of, not no holds barred, but wide scale deployment without considerable regulatory risk. I mean, we're not there yet. I mean, look, Waymo, which I mean, again, Waymo in the United States is pretty much kind of the best game in town when it comes to operating robotaxis, at least according to sort of all the data that I can see. One of their cars hit a 6-year-old
Although they
kid.
avoided tragedy last week. They avoided
They did avoid,
tragedy
yeah,
last week.
yeah. So the good news is the kid apparently is all right, but they hit a 6-year-old kid. That is bad. Okay, that is bad. It's not acceptable. And sure, fine. Maybe a human driver would have hit the kid too, but maybe not. And now I'm borrowing some ideas from a number of people, who are more expert at automation, at automated driving and evaluating automated driving safety than I am. Phil Koopman, there's other folks who have been reading about this, but then making these folks are making the point. Look, yes, the Waymo car has lots of sensors. By the way, a lot more sensors than a Tesla car has. But even so, well, here's Waymo telling NHTSA,
And
well,
LiDAR.
yeah, they have LiDAR, and Waymo's telling, well, basically saying, well, the kid jumped out in front of the car. We hit the brakes and we would have, well, a human driver may also have scanned the street, seen on the other side of a line of parked cars and made a judgment. It's like, I don't know what that kid's going to do, but I'm going to slow it down. In other words, there's a possibility that a human driver would have been able to put the pieces of the scene together as a human and say, that kid is going to run, that kid's running. I'm going to like stop it because I don't know if that kid's going to go on the street or not. The Waymo spokesman who's not here would say, well, you don't know that, and a human driver could have just as easily been on their phone texting and hit the kid full speed. True. I'm saying that hitting kids with an automated vehicle is unacceptable in the context of automated vehicles. And I do think that FSD and all these other systems are going to potentially face, basically backlash. People are going to say, look, why are we allowing these half developed systems out of out on our public streets? Where are the regulators? And you talk about China. I know this is a bit of a stretch, but I'll make it anyway. So yes, Chinese government is encouraging and incentivizing development of automated vehicle systems, right? At the same time, the Chinese government just today or over, last night, yesterday in Beijing time, said, hey, you know what? These invisible door handles, the pop-out door handles that Tesla pioneered and that Xiaomi and other companies in China have emulated, we're banning those because we've decided those things make it too hard to open the door in an emergency situation and pull someone out of a car. So it's not like the Chinese government has a, let 1,000 flowers bloom, do whatever tech you want. We don't care. It's up to you. No, no. Right. And I think the United States, you see the Trump administration, which is down, anti-regulation in most ways. Right. But you see NHTSA, and I think you alluded to this. NHTSA is looking into FSD. NHTSA is looking into Waymo. I think they're smart enough to know that just saying, do whatever the heck you want, guys, is not going to be acceptable. So I think
I get
it's
the
going to be
impression that NHTSA is kind of toothless because there have been accidents already with FSD with other
a lot of
systems,
them
but at most you see a slap on the wrist.
so
So,
far.
and then there's no open kimono to allow us as beta testers on the road for these systems to actually understand what's going on. And we say that, and Waymo is now they're valued at $140 billion or $126 billion.
Yeah. And again, I mean, that it's cognitive dissonance all the way. I mean, because this actually last week I did this, and lots of people I'm sure have done this. But if you dig into Google's financials, you will find a line or lines in their financial reports for other bets, right? Which is their term for, this sort of R&D stuff that their enormous cash flow enables. And Waymo's in that category. Now, they don't break Waymo out specifically, but Waymo, as far as I can tell, is probably one of the more significant and, biggest of their other bets. And other bets lost more than $4 billion last year. So Waymo is not, I mean, as we speak, it does not appear that Waymo is a money-making operation. It's losing a billion or more a year. And I know I said this to you earlier today when we were preparing for the show. So great, they raised $16 billion in this valuation, whatever you said it was, 100 and some billion dollars, which is impressive. On the other hand, 13 billion of that, and then I'm quoting Bloomberg here now, 13 billion of that came from Alphabet itself. So they're funding their own,
Right.
they're funding their own thing, which you'd expect. Two, if this company was profitable, they wouldn't need $16 billion from Alphabet and other investors. They would generate from the cash from operations, but they can't. And the 16 to me, and having watched this sort of thing in the auto industry before, you know, when auto companies raise cash from usually from the debt market, or in Tesla's case, would raise it from the equity markets. Either way, when they're raising cash outside cash flow, that tells you that cash flow isn't sufficient.
Right.
And so, anyway, that's the dissonance for me. I look at Waymo, I say, yeah, cool, they're worth $110 billion, but they are losing well over $1 billion a year and have been for years. And where's the turnaround there? That's my question.
Here's where I'm squaring that circle, because Waymo is a technology company. They're not automotive at all. They don't have factories. Their balance sheet looks completely different than a General Motors. But Tesla is a little bit of a hybrid because they do have the traditional assets that an automotive OEM has, but that valuation allows them access to capital at a
True enough.
fraction of what GM and Ford would have to pay. And
Hmm.
that creates flexibility. And again, when I look back, I look at Amazon and these other technology companies who have written huge checks in order to get to profitability. I just think that Waymo is one of those companies that they just hoover up capital, and then the but I do see progress in the autonomous vehicle. Now, is it point to point? Is it ready for big time all seasons in places like Detroit and New York City? No, of course not. But I do see progress. I don't know from a policy standpoint where we should go. I just know that there needs to be scrutiny on policy so that we have a say in how to regulate some of what's going on.
Yeah, and I think that's really I think that's really important. And the we have a say. That's really that's what I see. And I see this, in the sort of the larger debate about AI. I mean, there's all sorts of different. It's an octopus. You can grab one of any of 100 arms, but you look at the anger in a lot of communities around these huge data centers that the AI companies are putting up. You look at the concerns about automated vehicles, on public streets. I think there is a feeling, frankly, I'm starting to feel this way, that, I'd like to have a say before this particular powerful product or set of products, type of product is kind of set loose on society. I think if you listen to what the AI companies say, you listen to what Musk says about humanoid robots, or you listen to what Waymo says about transportation. There's a lot of pie in the sky and kind of dreamy talk about life, where you don't have to work. Actually, a lot of people would say it's a life where you can't work, where you have no opportunity to work. That's the nightmare. Um, you know, as I said, you really have to read Musk's manifesto about SpaceX and data centers in the sky, and you're just like,
And this is where you
really?
raise a good point
Really? We're
because
going to have this, we're going to have this? What, who's controlling that?
But I want to pull on that thread a little bit because you and I go to Detroit. I go on a weekly basis. You probably go every other week or, every third week or something like that. And the buses are not great, for on time. And for people that aren't well to do, that can't afford to have a car, gas, a garage, those buses are their only lifeline. And if you're working a job and you're 30 minutes away from your work and you have to take a bus and it's late, your boss is not going to care if you're consecutively late, even if you're doing your best. Okay. And so when we talk about these services, the Waymos, the Ubers, the DoorDashes, these are rich people services because DoorDash costs 10, 12, $14 just to deliver food. Okay. Not normal people, everyday people can afford that. So when we see this technology, the greater good gets left behind, I think.
No,
And
no,
and I think that's one, and I'm not trying to say I'm not a capitalist, but it doesn't seem to trickle down to the everyday consumer.
I think that's my concern. And I think that's a concern. And let's take this away from the two of us. I think you're going to see, if you're now, we're just trying to analyze these companies and look at what these companies are up against. I think that's a concern that a lot of people share. I mean, you're right. the bus system in Detroit, in the Detroit metro area, it is not adequate, and it's certainly not adequate to the needs of people to free you from having to own a car in order to get to your job on time, and that is bad, and it's something that should have been fixed a long time ago. I'm not sure Waymo is going to fix that, to your point. And now, could you have a mayor of Detroit, like a sort of a Midwest Zoran Mamdani who comes in and says, fine, you can have a license to operate, but you've got to offer discounted, service to allow people to get to work, people who don't have significant means to get to work. I don't know. Do you think Waymo would go for that? They might, but that's the kind of thing that I think you'd have to see, because if you're going to have these AI companies, and I'm going to call them all, they're all AI companies. Waymo's an AI company. If you're going to have these AI companies basically say, okay, instead of paying wages to bus drivers or wages to factory workers or wages to warehouse workers, human beings who do this kind of work, you're going to pay the wages to us, and we're going to and you're going to lease our robots, and those will be your workers. That's a big deal, and that's what the game is here. The game is not whatever it is they say it is. The game is, we're going to have robots, and you're going to pay them, us, our company, you're going to pay them to do work, and unless the economy grows by like triple, that means there's going to be less work to do for human beings. And people are people are aware of this, but I think it's getting sharper and becoming sharper into sharper focus. Um, and I think, in terms of the automated driving, I think it's that plus the, why do we trust these robots to have our best interests at heart as the public, and in terms of safety. So we'll see.
Andrew Yang ran for president, 12 years ago, I think now?
It
Like
feels
8,
like
12
forever.
years ago?
Yeah.
He's the one that brought in UBI, and he got laughed at, universal
Yeah.
basic income,
I'll believe it
and
when I see it.
that seems to, but, like, anyways, let's do this. Let's pivot now because we talked about consumers, and you had wanted to drill down on consumer confidence. So I haven't heard or seen any reports. So you have. So let's talk about that a little bit. What did
Sure.
you look at, and what were your findings?
No, no. So this was kind of the lead of my high speed rodeo this morning. Big Auto confronts the joyless consumer. I've been to a number of these kind of, early January forecasting seminars, and conferences where everybody, it's what we do here in Detroit in January because we have nothing else to do. So miserable. You can't go outside and it's gray and cold. And so
It's been consistently cold for like
it's
3
because
weeks.
you
So
know, instead of moping about that, or in addition to moping about that, you go, or we in the auto, media and analyst forecasting community go to conference rooms and talk about, what's the outlook for the year ahead. And I've been to a couple of those, Society for Automotive Analysts. The Detroit Auto Show had a bunch of this. Tomorrow and Thursday, I'm going to be going to the Chicago Fed's annual symposium, which is much the same thing. The through line in almost every presentation that I saw, especially at the Society for Automotive Analysts at FANUC, the through line is that consumers in the United States right now are just bummed out. Consumer confidence levels, depending on which measure you go by, are as low as they've been since the depths of the pandemic, almost as low close to as low as they were in the early 80s, late 70s,
let me stop you there,
malaise,
Joe.
depression.
Are you talking in general or automotive specific?
No, in general, in general.
Okay.
This is a University of Michigan consumer confidence, and also the Conference Board measure of consumer confidence. They're not exactly the same, but the trend lines, if I had a chart, I'd hold it up now. The trend lines, consumers, the consumer attitudes, the consumer attitudes about sort of what do you think, what do you, it's how you feel about your future prospects, pessimistic, optimistic. Those numbers and those readings are you know, all going in the wrong direction. It's as bad as it's been in any recent recession. And it's the kind of reading that usually in the past has pointed to a recession, and when people feel like, look, my prospects for getting a job suck. My outlook for getting a raise sucks. I don't like, I'm not happy. And the point that a number of the speakers at the SAA, the analyst conference made, it's pretty obvious. It's like, look, if you're not happy, if reading the news, reading the news, about what's going on in this country politically, makes you unhappy. If you turn every time you turn around, your boss is demanding that you train an AI on, all those things, and there are, real corporate layoffs are happening. So this environment, the kind of the messages from the world are, you should be concerned. How are you? Where's the optimism you need to sign up for a $750 or $900 car payment? If you are a person who's not, if you're not a wealthy person who really doesn't have to worry about money at all, those folks are fine. They're buying vehicles. We know that. We've talked about that. But this is sort of, the upper middle income families. And some of this stuff
Young
was
people
just,
too.
and young people. I mean, there's a lack of the kind of optimism that you kind of require to say, yeah, I'm going to sign up for a 5 or 6 year car note at 750 or whatever a month, because I know that, in 2 or 3 years that's going to be chump change to me. I'm going to be doing great. That's not how people feel. Interestingly, and Charlie Chesbrough of Cox Automotive said this, so did a couple other folks. If you are an economist, or if you just like look at the kind of the official measures of the economy, you say, well, everything's fine. Economy's growing. Inflation rates are not where they need to be, but they're certainly below where they were a couple of years ago. What's the problem? But that is not how people are not taking that on board. They're taking much more negative. So it was very interesting to see this, and to see that the auto industry is kind of in a box when it comes to pricing.
Well, so in the past, how have the legacy OEMs responded to potential recession? You know, they refresh product? Do they lower pricing? How do they deal with that?
So that's a great question, and I can think of a couple of examples, and I don't have to go back a million years to do it. And it kind of depends on the circumstances. Right after 9/11, the country was in shock, right, and justifiably so. Country was in shock, and there was a lot of concern that people were. I mean, talk about confidence, right? I mean, the people
People
were going to
didn't want to go out of their house.
people didn't want to go out of their house, okay, and people were in shock. It was horrifying. General Motors looked at that, and the management of General Motors looked at that, and a couple of things. One, they said, "My God, if we don't have a demand, and we have to shut down our factories, we're cooked. What are we going to do?" What they did was they said, "Keep America rolling. We're going to offer, at the
I
time,
remember that.
yeah, 0% financing, which was a big deal at the time. Now it's kind of like table stakes, but at the time it was a big deal. 0% financing, no interest financing. They basically put everything on sale, promoted the heck out of it, and people said, you know what? Okay, that was a tragedy what happened in New York and in Washington and in Pennsylvania. It's horrifying, but you know what? These deals are great, and I am okay. So people kind of were given permission to go out and buy, and they did, and it worked. Caveat, it worked so well that General Motors couldn't get off the dope, because once people saw a 0% rate, they said, well, that's the rate forever. And, that was not really to the benefit of General Motors.
Yeah.
Sometimes you can't escape a recession. In 2008, 2009, there was really nothing they could do. The companies were just, you know, two of them went bankrupt. There was nothing they could do. So I think the question is, let me say this. Right now, it seems like there's a chance, because the underlying economy it's not the financial crisis of 2008 right now, not at all. So it's possible that a car company could come out and say, look, we get it. You think cars are too expensive. We're going to cut prices 15%. Boom. Sales on. Go to your dealer right now. I mean, that's what people want to see. They don't I think people want to see a big reset of prices to something closer to what they were before the pandemic torched, prices to the moon. But there's a
You
lot of
know,
reasons why
the
that is going to be very difficult.
the one thing that is really disappointing for me, as someone who grew up having family that always worked at a GM or a Ford or a Chrysler or an FCA or a Stellantis, still do. My first thought is the GM of 2026. is likely Hyundai.
Yeah.
Because they have a broad range of vehicles. They have sedans, they have smaller cars. Because GM is going to be launching the Bolt, right? And I think that's going to be a significant product for them. But I can't think of too many that are appealing and affordable. Affordable and appealing, those sometimes, at least to the US 3, are contradictory, right? Because appealing normally starts
Yeah.
at
By the way,
$60,000.
yeah. Yeah. I agree with you. I think it's tough because, I mean, you pointed this out. Lots of people pointed this out. Ford just killed the Escape, which was one of their most affordable, I think arguably the most affordable, other than maybe the Maverick, but certainly the most affordable vehicle that you could reasonably think a family of like with 2 kids could buy this vehicle and get into it for low 30s. They killed it. They don't want to build it anymore. And so I think the companies talk about affordability, but when it comes to what they really want to sell, they're not interested in that. What they want to sell is $60,000, $70,000 pickup trucks because that's what makes money, and that's what you're seeing. That's what you're seeing, and it's a contradiction.
Joe, a couple statistics I saw over the last couple of weeks. Wanted to get your take on specifically the U.S. automakers. Jack Ewing, a New York Times columnist, wrote an article last week about the Canada and China trade deal, and he called out that only 8% of GM's Q3 2025, if I'm not mistaken, global revenues came from outside of Mexico, the United States, and Canada. The next statistic I'll throw at you is that retail sales of Ford Chang'an, which is Ford's joint venture in China with Chang'an Motor, was less than 100,000 units in 2025 total, on a base of 24 million units in 2025 for the China market. So give me your thoughts on those two crazy, crazy numbers.
Yeah, I mean, look, I mean, I think both. Let's start with General Motors. I mean, General Motors, from a profit and revenue standpoint, as you pointed out, it is essentially a North American regional car company. And yes, they have operations and sales outside of North America, and they have a China operation that's still reasonably significant, but it's not anywhere near as large as it used to be, and it doesn't return anything like the profit that it used to return. It's still there and it's meaningful. So they're not. I mean, I think it's a little unfair to say they're totally just a regional car company, but fundamentally they're a North American car company, which is why I think Mary Barra was quoted as expressing concern about this Canada China deal, which would allow what 49 50,000 EV Chinese made vehicles into the Canadian market on sort of a test basis. That's not good news for GM. Ford still has fairly significant European operation, but they seem to be focusing it more and more on commercial vehicles because that's still a profitable
Ford Pro.
segment. Yeah, still a profitable segment for them in Europe, but the consumer vehicle market is getting tougher and tougher. Again, Chinese competition is in there. The local car companies, Renault, Volkswagen, haven't died and gone away. In fact, if anything, Renault is showing some signs of resurgence, which is inconvenient because somebody needs to pack up and go home in the European market for the rest, to let the rest of the
A
players.
few need to. A few need
Yeah,
to.
yeah, it's always the other guy who should rationalize capacity and get out of the way so that the rest of us can make some money. Yeah,
And,
I
and
mean, I
and you
think
could argue that Renault is France's national brand. You could argue
absolutely.
that.
Yeah, I mean, Stellantis, kind of has, not kind of, Stellantis is also a French company in many ways. I mean, they're sort of, they have Fiat, which is Italy's national champion, and Peugeot, which is the national champion in
And
France,
they have Citroen.
and Citroën. So, look, I mean, there's 2 car companies that could reasonably call France home and be their national champion. It's probably one company too many if you're being rigorous about it from a capacity and profits point of view. But look, back to the point about Ford and GM. Yes, I think both of these companies, from a profitability point of view, both of those companies are now basically regional North American they're not even car companies, they're truck companies. They're North American truck companies, pickup truck companies.
That's a good point. That's a good point.
And that is the business that sustains them, and that is the business that they are really in. Um, I think you'll see both companies working very hard, particularly when it comes to trade policy, to make sure and environmental regulatory policy to make sure that those franchises are not, put in harm's way. I mean, that's just the way it is. That's how they survive.
Could you ever see a scenario as drastic as this sounds today on February 3rd, 2026, that GM and Ford could merge because the situation becomes so dire for them?
So, I mean, a lot of people know that that was contemplated during the financial crisis in 2008, 2009. There was, I'm not sure if it was GM that reached out to Ford. I think it was. And certainly the Obama folks, the automotive team that President Obama put together to run the auto bailouts, they certainly looked at that. And they also looked at
The
whether,
AutoZar, what was his name? I forget his name, but anyways, I know what you're
yeah,
talking
me
about.
too. There's a couple of them. But I think Steve Ratner was one. And
Yes, Ratner, yep,
yeah.
that's him.
And they also honestly, and again, this is a matter of record. I mean, they also looked at whether they should even bother bailing out the former Chrysler, now part of Stellantis, whether that was even made any sense. And I think one of the reasons they did engineer the sale to, Fiat Chrysler, or Fiat rather, Sergio Marchionne, was that they recognized that if you consolidated any one of the Motor City 3 into a fully into a Motor City 2, thousands of people would lose their jobs. And that was not on the agenda for the Obama administration. I doubt it would be on the agenda for the Trump administration. If it happens because we go into another recession, real recession, not sort of the psychological recession that we were talking about earlier, could that happen? I mean, yeah, I suppose, but you look around at the global auto industry, and we could spend a whole podcast going back and forth about how many car companies ought to be consolidated into another company so that you have one half decent rational car company as opposed to two companies that are floundering around. I'll just say one word, Nissan, but it hasn't happened because these companies, they're too big, they're too politically salient, they have too many people, and it's just very difficult to see to
And it would create a domino effect, to be quite frank, amongst other OEMs, but also on the tier ones to the tier fours. A Nissan takes out, there's still a couple of million units of sales. Okay. So that's meaningful business to a lot of tier ones. The last thing I want to get your thoughts on before we end the show is the rumors from the Financial Times about Ford, BYD, and or Xiaomi talking. They have vehemently denied that, but as a journalist, as uh, a very, very thorough journalist, have you run into vehement denials in past articles that you've written? And how would you read this? I look at it this way, Joe. I believe it's their fiduciary duty to create these conversations, whether they do anything or not.
So this kind of thing always drove me crazy when I was, working at Reuters or the Wall Street Journal, and a story like this would pop up in a competing publication, and you'd spend all this time chasing it. Um, this is one of those things that it appears not to be true, at least as framed, but it has legs because it kind of should be true, right? It
Hmm.
may not be true, but it should be true, or it could be true. Could it be true that Jim Farley, who, has expressed considerable respect and admiration for Xiaomi's car or cars, he got one and drove it around the United States. He said he didn't want to give it away or give it back. He's stood up a whole operation for this designed to try to replicate product development and technology processes. So you look at that and say, well, gosh, why wouldn't he? Well, and you know, has Ford people talked to or benchmarked or tried to gain intelligence from Xiaomi? Probably. Would they want to do a full-on partnership with Xiaomi? Well, again, maybe, but we know, that if Ford had a partnership with CATL, the Chinese battery company, to build a factory here in Michigan, and they got torpedoed by mostly Republicans.
And then they wanted to expand their BYD partnership.
Yeah, yeah. So I think the political and kind of the geopolitical or political animus against any kind of tie-ups with Chinese companies is very strong. I mean, we've talked about this. We certainly heard it, in connection with Canada's trade deal and all of this stuff. So I think I did see the Ford denial. And when I saw a denial, when this is completely false, that probably means it's not true. I mean, we don't talk about when something like this comes out and the companies, the honest response should be, yeah, we are talking to them, but you don't want to say that. What you say instead is, look, we talk to people all the time and we don't discuss those conversations, or we have no comment on rumors and speculation. That's what you say. Because, at least in the corporate world, telling flat out lies is not acceptable, kind of on a person to person basis, but also at some point, you can't tell lies to the investor community. It's just not really good.
So you don't think this could have been a trial balloon
I
by
mean, so I have a lot of respect for the FT. They're not a frivolous organization. I'm sure that whoever wrote that story, I don't know who it was. I'm sure that whoever wrote that story didn't just make it up. Somebody told them that this was happening, maybe more than one somebody. But it could have been,
they
and
said
this,
4 sources confirmed
yeah,
this.
okay. So it's quite possible that one, that these conversations took place, but from a Ford perspective, they were not aimed at a formal partnership or alliance, like with paperwork, but were more along the lines of, hey, could we, we really love to learn more about what you do, or something, something less formal, or more, more preliminary and exploratory, which allows Ford to say it's false that we are about to forge a formal alliance.
Informal.
But so, and the other thing is that, look, bankers and people, who want something to happen and want something to be true, we'll talk about it. And sometimes and I've had this happen in my own case, where you're in a conversation and you lose track of whether we are speculating, right? Or whether we're talking about something that's actually happened. And
Now we sound like a president
yeah, yeah.
that
I mean,
I can't think of his name, but now we sound like,
yeah, well, yeah, exactly. Yeah, that guy. So look, I think the FT reported this in good faith. I think they did it, and they said they had 4 sources. I believe they had 4 sources. I don't think they make stuff up. I do think it's possible for a reporter to be, to either misinterpret something, or to be told something by an interested party who wants a certain thing to be true, or wants to float a trial balloon to see how it would go and be used in that way. And it's not like that never happened to me. Okay, I mean, sub I've written stories where I subsequently realized, oh gosh, I was being used to, for
mm,
as part of,
for messaging,
as a chessboard or as a messenger. And sometimes I knew that. I mean, one story in particular where, I was called in for an interview with a fairly senior executive of GM, and I can't remember if it was on or off the record, so I won't say who wanted to send a message to an overseas partner about just how unhappy General Motors management was with that partner's behavior, or the behavior of that partner's kind of ecosystem. And, you know, I got a whole interview about this and dutifully wrote the story. And then I realized, oh, was, I, this wasn't news. This was me being used as a telegraph operator.
uh,
Like, fine, still a decent. People were really unhappy. People were really disgruntled with each other. So it wasn't like, but I do think that look, I'll say one last thing about this. I go back to this point. Should Ford have an alliance with Xiaomi if the goal is to go to, and I'll throw this to you. Should Ford have an alliance with Xiaomi in order to get access to the technology and the technology processes that Xiaomi uses and apparently uses to pretty effectively? Should they? Would that be a good thing for Ford?
yes, without question. Let me round this conversation out. I know the FT guys pretty well, in Asia, in the United States, in Europe. I don't know them to be very frivolous either. I think they're a really, really, really good media outlet. And number one. Number two, I got contacted by multiple media outlets about this story. I couldn't confirm anything, so didn't really have any comments. So it wasn't just FT that was chasing this down. The other thing is, to me, it's credible because BYD and Ford already do business. So to say, hey, let's just have a conversation about X since we're already here meeting about Y. So that to me is not a stretch. And the second thing, to your point, Xiaomi, their automotive division is less than 5 years old. It has sold 400,000 cars, two products in the last year. They're probably going to get to 600,000, and they're the belle of the ball. And they've been consistently the belle of the ball over the last 2 years that they've been selling product, despite a price war, despite new products coming out 6 to 10 months. So there has to be envy. I would be envious because, and the other thing that's really important in China, their car starts at $35,000. And it's something that they could easily sell for 60, 65. Maybe not in the China market, but definitely in Europe and the United States. And there would be room, and there would still be room. So, and to your point, Farley has been effusive of his praise, okay, of the Xiaomi SU7. And so, but again, I look at it like Stellantis should not be part of this conversation because it needs to be a GM and Ford how they become competitive globally. And because Stellantis owns 20% or 19% of Leap Motor. So right then and there, that creates an opportunity for Leap Motor to build in Canada at that facility that's not building anything in Brampton or Windsor or something like that. That creates an immediate opportunity. And again, this is why Mary said we are very concerned about that because, if we're playing 3D chess, I don't want to get into it too much, but the equation has changed in just the last 3 or 4 weeks. And the discussions that we have with our contacts and with each other has materially changed as well. Not only because of Tesla, but because of Canada and China and then Geely, at the beginning of the month during CES. So, and if people aren't concerned or at least really paying attention, then they're not doing their jobs. And that's how I look at it. So, a few great guests over the next few weeks, Joe and I, and we won't tell you who they are just yet, but they're going to be very informative, almost like experts in their fields. Looking forward to those. And then you and I will probably back in the next couple of weeks with an update for the next episode as well. So, everyone, thanks for joining us, and we'll talk to you next time.